Oh, right here?
Yeah. Hi, Peter Hi, Peter Sumlin with Capital Intel. I was with Shuster and I covered what he said. We don't need a national infrastructure bank. We have a bond market. And as we're talking bipartisan, Mark Warner has taken the leadership completely on this issue. First, promoting a national infrastructure bank. Now he's calling it a national infrastructure financing authority. We have about $2 trillion in Abu Dhabi and in our banks willing to invest in U.S. infrastructure. But we have both people are for it, both on the Democratic and Republican side, and as many people against it on the Republican and Democratic side. How can we get this? We need a bank. We need some kind of authority because nobody's going to invest because nobody trusts local, state, or federal government to keep their word after 2 years. They do trust a private bank that can pick and choose the profitable projects. How can we do this? As you know, we got Midway that's for sale, BWI's for sale, we have infrastructure projects galore, but it's all waiting on the sidelines until this is done. Thank you.
If we're thinking about attracting new and different sources of capital to infrastructure, I think one example of a program that was alive for a couple of years that worked very well was Build America bonds or other forms of direct pay bonds. These were part of the 2009 stimulus law, American Recovery Act, and they are structured differently from tax-exempt bonds. With direct pay bonds, the interest paid by the borrower is taxable to the investor. And instead of getting a direct break in the borrowing cost, the borrower, in state and local government, gets a reimbursement from the federal government for a portion of their interest expense. And these types of products were extremely popular during 2009 and 2010 when they were able to be used. And one of the reasons they were so successful is because they attracted sources of capital to infrastructure projects that we don't normally have access to. So it's sovereign wealth funds, for example, or pension funds, or life insurance companies, organizations that don't pay any federal income tax or pay tax at a low rate, that don't have any interest in a tax-preferred investment, but they're very eager to invest in infrastructure, and that was a successful example of how we were able to attract capital from those participants. There hasn't been any movement to revive anything like Build America bonds since they expired at the end of 2010, but I was encouraged by this paper that the Trump campaign put out in the fall that really focused mostly on tax credits, but they also made mention of a direct pay type bond as a supplement to a financing arrangement. We think that's worth reconsidering.